Very good evening, my dear friends. So we are in the chapter liquidation of companies. In the last session, we seen the basic intro part related to liquidation of companies. So in our total slot out of 9, we successfully completed 7 slots. So till we have 2 slots including this. So today we are going to take 1 slot and tomorrow morning we are going to take another slot. With that, liquidation of companies chapter will be completed. And I seen so many messages in the query box. Sir, from when will onwards May 2024 sessions are going to start? So as I told you, ICAI will release the schedule near soon. So something like that in the month of November or somewhere. Okay, just you can follow the updates. So framed by the ICAI accordingly, just you will get the updated schedule. But one thing is sure, coming to my particular part, so amalgamation, internal reconstruction, the same chapters and the same content is going to equally applicable for May 2024 as well. So the current chapter which I'm dealing, liquidation of companies, is having their applicability only for November 2023. It doesn't applicable to May 2024. Once again, just I'm clarifying. Yeah, that's fine, guys. Apart from all these things, so what we learn, let's give a quick recap. So liquidation and winding up, even though synonymously we are using, both are conceptually not same, because liquidation is the procedure adopted by the liquidator at the time of closure of the company, but winding up is ultimate an event which is simply nothing but order made by the specific court to close that particular company. And we also seen the applicability of the liquidation as per the current statutes. So basically, the winding up will be broadly classified into 2 types, that is compulsory winding up and voluntary winding up. In case of compulsory winding up, if a company is going to liquidate with a reason that due to inability to pay debts, that is, it became insolvent. In that case, insolvency and bankruptcy rules 2016 will be applicable, but nowhere we are going to discuss, which is not part of our syllabus at all. Due to any other reasons means which is order made by the NCLT, then Companies Act 2013 are applicable. So certain reasons I already explained in the last class, that is company affairs are against the sovereignty and integrity of the country. Company was framed with an intention to deceive the public, or company's affairs are in fraudulent manner. At that point of time also, if the ROC or the representative of the central government, if they made any petition to the NCLT, then the NCLT may order for compulsory winding up. If the company is defaulted in filing the annual returns for a continuous period of 5 years, then the NCLT may have a right to order for the compulsory winding up. And on NCLT, on their sumoto basis, it is equitable and justable. If it feels, then NCLT may order for compulsory winding up. And if NCLT may also order for compulsory winding up by passing a special resolution by the company in some situations. Coming to voluntary winding up provisions. So up to 31st March 2017, Companies Act 2013 is applicable. So right now, in the present time, the Companies Act 2013 completely loses their relevance. So since 1/4/2017 onwards, IBC voluntary rules will be applicable. Next, we've seen a couple of provisions related to IBC voluntary rules as well. I mean, whenever a company want to voluntarily winding up, which type of procedure they should need to be adopted, we've seen. Like the company first, it should need to prove it is a solvent, right? So to do that, majority of the directors should need to provide a declaration which is accompanied by an affidavit. Sir, declaration means declaration related to our existing assets are sufficient to make repayment to the liability holders. And along with that, to proving that the 2 years prior audited financial statements, it should need to be combination with valuation report provided by a registered valuer. First, it should need to be submitted to the appropriate authority. Then appropriate authority believes that yes, the company is solvent. Then the the appropriate authority will provide the further clarifications with regard to the voluntary regulation. If the company fails in the step number 1 itself, then the approving authority may not facilitate for the voluntary liquidation procedure. Next, so after this, within 4 weeks, ultimately it should need to be approved by the shareholders, because voluntary liquidation means it is a cause due to either shareholders or maybe the creditors, whatever the case may be. So in the general meeting, shareholders should need to pass a special resolution to approve that, or if it is voluntary liquidation through creditors, 2/3 of the creditors should need to approve. Then we can assume liquidation process is initiated from that effective date of passing special resolution. Within such 7 days, voluntary liquidation procedure will be initiated, and at that point of time, the board will appoint a particular liquidator. In generally, we are known as what? Insolvency professional. We've seen the terminology also we've seen at that point of time. So I showcase the website of the IBBA and everything. So which, coming to the Companies Act 2013, we are call it as a liquidator. Then the liquidator will initiate the liquidate procedure, like a realization of all assets and making payment to the various parties. And finally, he will prepare a final copy. That final copy will submit to the adjudicating authority. That adjudicating authority will pass a winding up order, and it will be sent to the ROC. Within 14 days, then ROC will struck off that particular name from the database, right? Then if it is the situations in case of the compulsory winding up as per the order made by the NCLT, then the procedure how we should need to adopt. So first, that part also I already explained related to theoretical issues. That part, what happened? First, the party who provide the petition, along with the petition, it should need to be accompanied by the statement of affairs to the NCLT. After verifying the petition and statement of affairs, NCLT will provide a green signal for further procedure, then where NCLT will appoint the liquidator as well. Whatever the statement of affairs it got from the company is ultimately handed over to the liquidator. Here, statement of affairs is a particular statement prepared in a particular format as per the Companies Act 2013 with respective to estimated realizable value of assets as well as estimated payments made to the various liability holders should need ultimately prepared by the board of directors, because board of directors are such a persons who have good knowledge on the existing affairs of the company, but altogether liquidator is a new party to the company. So with the help of the statement of affairs, liquidator can easily correlate each and everything, then which will create a benchmark for realization of assets as well as making payment to the various parties. So then once the liquidator will be coming to the picture, then board of directors will lose all their rights, all their duties. And shareholders, we are technically known as contributories. Then liquidator will start realizing the assets, will start making the payments in a particular order. After completion of all such things, then liquidator should need to prepare a liquidator final statement. Such liquidator final statement resembles like a receipts and payments account, which is ultimately submitted to the court. So once court received the liquidator final statements, if everything goes well, then court will pass a winding up order. It will be ultimately sent to the ROC. Then ROC will struck off the name. This is the procedure going to be adopted as per Companies Act 2013. So I told you as on that day, sir, then which topics we are going to learn in this particular chapter, liquidation of companies. Okay, the major topics were, these are not related to accounting treatment, guys. This chapter is not related to accounting treatment. This chapter is all related to the procedures. Okay. So let me give the topic names here, which topics we are going to learn here. That is number 1, statement of affairs. Statement of affairs. So number 2, list B, contributories. Next, section 326 and section 327. and liquidator final statement. Section 326 is related to overriding preferential payment. Overriding preferential payment. Section 327 is related to preferential creditors. No worries, everything you will know. So at the end of the session. Now, sir, I told you for importance or significant items wise, you can just count it from right to left. That is liquidator final statement, then overriding preferential payment, preferential creditors, then list B contributory, then statement of affairs. So even though we are going to deal the statement of affairs at the end, just I want to introduce one thing at the inception itself. What is that? What are the various lists present in the statement of affairs? In general, in the statement of affairs, what ultimately we have. So simply estimated realizable value of assets and estimated realizable value of liabilities, right? So in the statement of affairs, the total assets and liabilities, we are going to divide into various lists. So if you take assets here, so consider liabilities here, liabilities plus capital, not only liabilities plus capital, you can consider here. So assets are broadly categorized into two types. So one is ANSP and the other one is ASP. So which is list A is ANSP, list B is for ASP. ANSP stands for assets not specifically pledged. Assets not specifically pledged. ASP stands for assets specifically pledged. So what is the meaning of these two, sir? If any particular asset is offered as a security, then such particular asset is categorized under asset specifically pledged. If an asset is free from the security, that means it is not offered as security at the time of availing any loan, then which is categorized as assets not specifically pledged. Simply, A category assets are ANSP. B category assets are offered as a security. We should need to bifurcate those into assets not specifically pledged and assets specifically pledged. Is it okay, guys? Next, coming to liabilities and capital portion. So let me consider liabilities here. Let me consider capital here. So liabilities again divided into two types, that is secured creditors, unsecured creditors. Secured creditors again divided into two types, that is secured creditors with fixed charge, secured creditors with fixed charge, secured creditors with floating charge. Unsecured creditors divided into two parts. Preferential creditors and other unsecured creditors. So capital side, that is two capitals are available. One is preference share capital and the other one is equity share capital. Sir, ANSP list A, ASP list B. Now coming to liabilities, what are the list numbers, sir? Can you provide here? So secured creditors with fixed charge is list B only. Again, list B. So list B already given ASP na. This is also list B only. Then list C is preferential creditors. List D, secured creditors with floating charge. List E, other unsecured creditors. List F, preference share capital. List G, equity share capital. What are these different lists, sir? These are the list for the purpose of presentation of statement of affairs. But I'm not dealing anything right now about statement of affairs. Just I want to introduce what are the various lists are available as per the statement of affairs. So now let me explain. So in brief about one by one, as I already just explained things related to ANSP and ASP. ANSP is those assets which are free from security. ASP is those assets which are offered as a security at the time of availing the loan. Now, for example, sir, I took a bank loan for 10 lakhs. For that, plant and machinery was offered as a security. So now plant and machinery, let us assume, which is 12 lakh in my books. Now, bank loan is a secured creditor with fixed charge. Bank loan is a secured creditor with fixed charge. And the plant and machinery is a ASP, asset specifically pledged. That's why if you give plant and machinery to list B, then you should need to give the respective loan also to the list B. That is the reason why asset specifically pledged and secured creditors with fixed charge, both I combined and I provided under list B. Do you understand? In fact, here what I will provide, for example, bank loan is 10 lakh, plant and machinery outside market value is also 12 lakhs. Let us assume. Now still I have surplus about the asset. I have the surplus portion towards the asset. That's why the entire bank loan I can treat it as a secured creditors with fixed charge only. No, sir. Let us assume plant and machinery market value is 7 lakhs, not book value. So because book value is completely irrelevant for me in the market, it is 7 lakhs. Let us assume. Now, is it plant and machinery is sufficiently to cover the whole amount of the bank loan? No. That's why out of this 10 lakhs to the extent of 7 lakhs, I will cover under list B secured creditors with fixed charge. Remaining 3 lakhs, I will treat it as a other unsecured creditors as per list E. So as per list B, I will treat 7 lakhs. As per list E, I will treat the 3 lakhs because which is other unsecured creditors simply. There is no security covered on that excess of 3 lakhs of the bank loan. Do you understand? Something like that I should need to bifurcate. So that is the reason why both ASP and secured creditors with fixed charge was categorized under list B. Fine. Then you may have a doubt, sir, after secured creditors with fixed charge, in generally you should need to go for payment for secured creditors with floating charge, But after list B, you give priority to preferential creditors. Why, sir? In the order, just I'm telling here, first, the list names itself, if you see, you can simply tell this is first. Okay. Next in the order of preference, I'm giving to the preferential creditors. Sir, preferential creditors are unsecured creditors, Secured creditors with floating charge is secured creditor, Why you are giving preference to the preferential creditors even though secured creditors exist? I'll tell you the reason. So I don't know whether it is correlate or not. Just a simple example just I want to provide. So don't think otherwise. Just I want to create a silly example. You know, in a particular theater, a movie is going to release. So the hero of that particular movie is very popular in the entire Indian movie industry itself, then definitely there will be huge queue lines will be available in front of the ticket counters. Then all the persons just they stand on the lines. So up to the availability of the tickets, persons who are in the queue, so the the theater management will provide the tickets, right? But for that particular hero, fans will be available. Such fans will never within stand on that particular line, but they will come before just the startup of the movie as well. But they will definitely get the tickets, even though they are not withstand in the lines. Now the fans are look like the preferential creators, and the persons who are lying on the line are we can treat it as a security creators with floating charge. So definitely fans will get tickets. Whether the security creators with floating charge will get the tickets or not, it doesn't matter. So simply to understand this, just I told you. So such a type of persons will also be available in case of companies, even though those persons will not have any security, but still we are calling those persons for making or for settling payments before making payment to security creditors with floating charge. Sir, can you give some examples or can you elaborate some more for the preferential creditors? There is a separate section we have, that is section 327, which is dealing with the preferential creditors only. At that point of time, I clearly explain who are preferential creditors, why we should provide the first payment before making payment to the security creditors with floating charge. Just for the time being, you can simply remember. So first we should need to make payment to preferential creditors, post that security creditors with floating charge. So other than preferential creditors, the remaining unsecured creditors are other unsecured creditors. Next, we will give payment to other unsecured creditors. Then preference share capital. You know, preference shareholders will get preference in two cases. That is one at the time of liquidation of the company, at the time of getting dividend. So that's why at the time of liquidation of the company, first we should need to make payment to the preference shareholders. After that, we will make payment for the equity shareholders. So the list also simply you can remember list A NSP, list B ASP, as well as security creditors with fixed charge. List C is for preferential creditors, list D is for secured creditors with floating charge. List E for other unsecured creditors. List F is for preference share capital. List G is for equity share capital. Is it fine, guys? Can I continue furthermore? Okay. So let me continue, guys. Sir, as I already told you, statement of affairs at this stage, I don't want to deal the whole part. Okay. So just the lists, which different lists are available, just we've seen. First, let me give my entire concentration on liquidator final statement, guys. From here onwards, I'll come one by one. Okay. So till now, just you've seen the trailer. Just I'm entering into the main pitch. Again, I'll come back to the statement of affairs. In detail, we will discuss at the end of this particular chapter. So let's spend good time on the liquidator final statement on importance wise. Liquidator final statement. Sir, how a liquidator final statement will be? It is simply look like receipts and payments account only. Yes, this is receipts and payments only, because under left hand side, we will record all the receipts. We will record all the receipts. Which is amount rupees. On right hand side, we will record all the payments, which is amount rupees. The format of liquidator final statement will simply look like the receipts and payments only. But you know one thing, who will prepare this liquidator final statement? Liquidator will prepare. To whom it should need to be submitted? It should need to be submitted to the adjudicating authority or the appointing authority ultimately, right? And in case of liquidator final statement, estimated values will be there or actuals will be there. Actuals will be there, right? First, receipts means first liquidator, which one he is going to sell. Is it assets specifically pledged or assets not specifically pledged? There is no particular order for realization of assets. Which assets he can able to realize, such assets he will realize first. For example, in generally, he can able to realize stock in very less time. To realize money from property, plant and equipment, it may take much time. So depending upon the feasibility, just he will realize, and there is no particular order specified in the Companies Act 2013. So let us assume if he started with ANSP, but what are the assets he realized, he should need to classify into ANSP, assets not specifically pledged, and ASP, assets specifically pledged. So in my example here, I given that plant and machinery is offered as a security at the time of availing the bank loan. Then plant and machinery you should need to consider here, assets specifically pledged. Outside market value, how much? Let us assume 12 lakhs is the outside market value. Do you understand? So other assets, so stock we have, which is not offered as a security. So stock outside market value 10 lakhs. Sir, I have the cash. Okay, let us assume I have the cash for 8 lakhs. Like that, each and every individual asset we should need to represent under ANSP and ASP according to their type. Then under ASP, that particular asset is offered as security, right? Then the relevant liability also you should need to represent here. Let us assume bank loan is there, which is security creditors with fixed charge. So the bank loan is 10 lakhs, sir. Then the excess of realization over the security creditors with fixed charge, you should need to make it transfer to the outer column. So here total 10 plus 8, 18 lakhs. Now with the liquidator, total how much cash is available? 18 plus 2, 20 lakhs is available. Now with that, what liquidator will do? Liquidator will start distributing amount to the various parties, out of which what is the order or in which manner he is going to distribute, sir? First, always he will start with legal charges. Okay. Liquidator remuneration. So any other liquidation expenses, then preferential creditors. Tell me guys, in the order next whom I should need to pay. Security creditors, floating charge or preferential creditors? First preferential creditors. So that's why preferential creditors. Then security creditors with floating charge. Then unsecured creditors, that is other unsecured creditors simply. Then preference share capital or preference shareholders. Then finally equity shareholders. This is the order of making payment. Sir, legal charges. What is the meaning of legal charges, sir? So legal charges means maybe the court fee, maybe the stamp duties. Those are mandatory. So without involving such expenses, we are unable to initiate the liquidation procedure itself. So that's why first we should need to make payment for legal charges. Then liquidator remuneration. So separate discussion will be there. Just hold for some time. How we are going to calculate liquidator remuneration, what are the various types are available, I'll explain. So now the liquidator is appointed by the NCLT or whatever the case may be. He will not offer his service at free of cost, right? So definitely he'll get some remuneration. That's why in preference, first we should need to give the liquidator remuneration. Then liquidation expenses. So liquidation expenses means maybe for sale of these assets, maybe any advertisements they may incur. Okay. So any other expenses which related to the liquidation, you can put it here. After that, you should need to make payment to preferential creditors. Sir, security creditors with fixed charge you already provided. That's why don't write here. Security creditors with fixed charge you already just mentioned under ASP itself. Actually in the order first it will start with this. Okay. Then security creditors with floating charge. Sorry. After this, preferential creditors. First security creditors with fixed charge. After that, preferential creditors. Right? We told you that is the reason why list C given to preferential creditors as per section 327. I'll tell you later why we should need to give the preference to preferential creditors even though security creditors with floating charge are available. Right? Sir, but for presentation part, first why you wrote the security creditors with floating charge, sir? Even though you are making payment to the preferential creditors in preference to the security creditors with floating charge. There is a reason. This is the presentation aspect. The presentation aspect is I want to make it present unsecured creditors at single spot, secured creditors at single spot. For that reason only, secured creditors with floating charge was shown before preferential creditors itself. But at the time of making payment, first payment should need to be given to preferential creditors, then only the payment will be available to secured creditors with floating charge. Because preferential creditors is also unsecured creditor, other unsecured creditor is also unsecured creditor, to represent both at a single point of time. Just I represented like that. Okay, hope you got this point. So after secured creditors with floating charge, the next payment will be unsecured. Unsecured, after that preference share capital, that is preference shareholders. After that equity shareholders. Guys, anyone having any doubt in this? First let me know. Anyone having any doubt here? I think so. I'm not seeing much messages here. Maybe today very few members joined, okay, due to change in schedule. But still, persons who have joined, just let me know. So till now, any doubt in presentation of the liquidator final statement? Hopefully no. Okay, fine. So next. Guys, liquidator final statement presentation is not that much of easy as like I said. Lot of intricacies we should need to discuss. If I discuss one by one issues, then you can understand the internal adjustment what you should need to follow at the time of dealing the problem. I mean, first let me explain various internal concepts involved in this liquidator final statement. Okay, point number one. For example, a particular asset is there. Just you can consider any asset. Let us assume inventory is there, or let us assume plant and machinery itself is there. Plant and machinery is there. Sir, plant and machinery book value is 15 lakhs. And while realizing that particular asset by the liquidator, so he realized value is 8 lakhs only. And the relevant loan is bank loan, which is at the rate of 10 lakhs. Now, first let me know this plant and machinery, we should need to treat it as ASP or ANSP. Definitely this plant and machinery is asset specifically pledged. You know that. So at the time of availing this blank loan, this plant and machinery was offered as a security. Now my question is, out of this bank loan 10 lakh, how much will be secured? How much will be secured? How much will be unsecured? Do you think that entire 10 lakhs will be the secured? No. Book value is irrelevant for me here. Realized value is only relevant for me. Loan is 10 lakhs. The entire portion doesn't covered by the realized value of the plant and machinery. Now, out of this 10 lakhs, the secured portion we will tell it is 8 lakhs. So that's why bank loan secured creditors with fixed charge, we will treat 8 lakhs. Remaining 2 lakhs, we will treat it as other unsecured creditors. This is the first important point you should need to remember. That means always the book value or the value which is present in the balance sheet is completely irrelevant for my discussion. While presenting the liquidator final statement, always the realizable value only plays the vital role. Next, let me explain the second issue. Okay. What is that, sir? Things related to liquidator remuneration. Liquidator remuneration. The liquidator remuneration is in generally given in these three methods. One is lump sum method. Lump sum method may be based on percentage on assets realized, or based on percentage on liabilities or shareholders payments. In any way in the problem they will mention. Sir, lump sum method means how much liquidator remuneration company is going to provide straight away given as an agreement. Lump sum means that ad hoc consideration. With this, really, there is no problem. If you remember, in case of amalgamation, if the PC method is lump sum method, there is no problem. Direct information itself is available. So similarly, in case of lump sum method here, there is no problem at all. So the amount itself is directly given in the problem. Percentage on assets realized. Percentage on assets realized means, for example, in the problem, it is given something like this. Liquidator will get remuneration based on like 2% on ANSP. 2% on ANSP. Let us assume in the above example, ANSP how much? 10 plus 8, 18 lakhs was realized by liquidator. Then liquidator will get the remuneration 18 lakhs multiplied with the 2%. Simply. Maybe liquidator will get a liquidator remuneration based on percentage of a specific asset, maybe building, maybe land, something like that also they will provide. Everything they will provide in the problem. Simply we should need to work out based on the problem information. Now, in case of percentage on based on payment made to liabilities or shareholders means, maybe let us assume if it is based on percentage on liabilities payments. Example I am telling you. 1% on amount payable to secured creditors with fixed charge and preferential creditors and floating charge and unsecured creditors also. If you pay some amount to fixed charge, liquidator will get 1% on that. If you pay some amount to the preferential creditors, liquidator will get 1%. If you pay some amount to the floating charge, liquidator will get 1%. If you pay some amount to unsecured creditors, liquidator will get 1%. Something like that they may provide. They may also provide that liquidator remuneration may be based on amount payable to preference shareholders and equity shareholders. Like that also they will give. But when the problem will be coming to the picture, in this case, I will tell you, concentrate. Let us assume cash availability with the liquidator. Cash availability with the liquidator is equal to 1 lakh. Okay. 1 lakh. Sir, liquidator remuneration is based on 1% on payment made to equity shareholders. Liquidator remuneration is 1% on payment made to equity shareholders. So I have equity share capital paid up value will be 5 lakhs. Now this is the problem information. So amount payable to equity shareholders is 5 lakhs, but the cash availability with the liquidator is 1 lakh, and the liquidator remuneration will be 1% on payment made to equity shareholders. Now, do you know how much amount you can ultimately settle to the equity shareholders? No. Sir, if I have 1 lakh, if that 1 lakh is given to the equity shareholders, then liquidator, what about the liquidator? Then liquidator 0 you will give? No, right? If you know how much amount you can able to settle to the equity shareholders, on that liquidator will get 1%. Simply, you can resolve this issue like this. Let us assume cash availability, or simply let us assume amount paid or distribute to equity shareholders 100. If you are distributing or if you are paying 100 rupees to equity shareholders, the liquidator how much will get? 1% means 1 rupee he will get. Now 100 plus 1, 101. That is cash available before making payment to liquidator remuneration, before making payment to equity shareholders. If you have 101 with the liquidator, then liquidator can able to take 1 rupee as remuneration and the remaining 100 rupees he can simply distribute among the equity shareholders. Do you agree? This 101 is equal to this 1 lakh. This 101 is equal to 1 lakh. For 101, if it is equal to 1 lakh, then for remuneration for 1, which is how much? If you made the cross multiplication, then which is 1 into 1 lakh divided by 101. If I convert, this is in theoretical manner, cash available with liquidator before making payment to such shareholder as well as liquidator remuneration multiplied with percentage of commission divided by 100 plus percentage of commission. This is the formula for computation of liquidator remuneration when the cash is insufficient to make payment to the particular party as well as liquidator remuneration. But if the cash is sufficient, there is no problem at all. If the cash is insufficient, then only this problem will be arised. Is it okay, guys? All of you, let me know. Is it fine? Hope you understand this formula, all of you. Yeah, this type of questions may come across in the examination for computation of liquidator remuneration for 5 marks. He will give 2 to 3 criteria. One of the criteria is based on percentage on amount payable to equity shareholders or preference shareholders or maybe other liability holders. So the cash will be insufficient. At that point of time, you should need to apply this method. That is cash availability with the liquidator before making payment to liquidator remuneration as well as that party into percentage of commission divided by 100 plus percentage of commission. Then you will get liquidator remuneration. Fine. Now in this scenario, hope you understand how to calculate liquidator remuneration. So more than that, they will not ask any other thing related to liquidator remuneration. Then what I should need to tell? Yeah. Let's consider things related to security creditors with floating charge. Security creditors with a floating charge. Sir, you may ask a question. What is the difference between fixed charge and floating charge, sir? You may come across these concepts in Companies Act 2013 already in the respective subject. So the main difference between fixed charge and floating charge is, in case of fixed charge, the assets which are offered as a security can be clearly identifiable manner. Clearly identifiable manner means which building they are provided as a security, they will give. Which plant and machinery they provided as a security, they will provide. The documentation, everything clearly identifiable manner. In case of floating charge means group of assets they will provide. They will not mention specifically, sir, which asset you are offered as a security. Buildings I am offering as a security, but which building they will never tell. Do you understand? So in group of assets, if they are offered as a security, then we can call it as a floating charge. If a specific asset offered as a security, then we can call it as a fixed charge. In generally, when floating charge will be asked by the, or when the floating charge will be expected by the liability holder. In most of the cases, debenture holders will expect floating charge, but not fixed charge. Because, you know, in case of debenture holders, even though those are not form part of the owners, even though they are not having any right in the ownership, still they are also the major contributors of the company. With their debt, company may do a lot of activities. And that too, Debenture holders with that huge money, they want to make a charge or they want to have the control on the group of assets. So at that point of time, most of the times debenture holders want to stay with the organization as a floating charge. Okay. So right now the discussion is how you should need to differentiate the fixed charge with floating charge. That is not my discussion. That is not my intention. My intention is, sir, in case of floating charge, most of the times, debenture holders will be acting as floating charge. Then debenture interest will be available, right? Debenture interest. Up to which date debenture interest, up to which date debenture interest is treated as floating charge. Up to which date debenture interest will be treated as floating charge. I'll give an example, then you can understand my point. Let us assume the liquidation initiation by the liquidator will be as on 30th September 2020. Okay. So in my organization, debentures are generally paid annually. That is as on 31st March of every year we are going to pay. Now last time I paid as on 31st March 2021. In the current year 21-22, I not yet paid any amount. Now, which is the liquidation date? From 1/4/2021 to this 30th September, sorry, from 1/4/2022 to in the year, I'm in the year 22-23. I'm so sorry. Yeah, in the year 22-23, I paid last payment is 22 only, not 21. So again, I'm repeating my example. Last date of or last time payment made to the debenture interest was 31st March 2022. Now I am in the year 22-23. Since 1/4/2022, 30th September 2022, I not yet paid any amount. So the debenture interest cover from last date of payment to current date of liquidation will definitely should need to be settled along with the debenture holder principal. That's why this period interest, I will call it as secured creditors with floating charge only. Secured creditors with floating charge only. But my question is, interest portion after the date of liquidation till the date of settlement of the debenture holders principal, how I should need to treat. From the date of liquidation to date of settlement of the debentures, still can I continue as a security creditors with floating charge? That is my question. Can you please all of you provide your answers right now? How many persons are just want to treat the further interest from date of liquidation to date of settlement of debentures as security creditors with floating charge? No, sir. It is not security creditors with floating charge. Otherwise, you can give the other answer. I'm not seeing any answers. Hope you understand my question first. Debenture interest from the date of liquidation to date of settlement of the debentures. How I should need to treat? I will tell you, no one is providing any answer. If the company is solvent, then the liquidation initiation date to date of making payment. If the company is solvent, from the date of initiation of liquidation to date of settlement of the debentures, then the company should need to pay this debenture interest. If the company is not solvent means company is insolvent, then no need to pay this debenture interest from the date of liquidation to date of repayment of the principal. What is the meaning of this solvency and insolvency, sir? Simply, I'll tell you, concentrate. Sir, after making payment to legal charges, liquidator remuneration, liquidation expenses, security creditors, preferential creditors, security creditors with floating charge, and unsecured creditors. Still, liquidator is having some cash on his hands, sir. Means company is solvent. What is the meaning of solvency? The available assets are sufficiently covered to make the repayment till unsecured creditors. Still, the liquidator is end up with some cash, sir. Then the company is said to be solvent. No, sir. Some of the unsecured creditors only covered. Some of the unsecured creditors we are unable to pay, or the amount itself is sufficient up to the day, up to making payment for up to secured creditors with floating charge. Unsecured creditors will not get anything, and company became insolvent. If the company is in solvent, or the company is in solvency position, then from the date of liquidation to date of repayment of the debentures, still the company should need to settle. But when the company will settle, after making payment to all the unsecured creditors, whatever the balance is available, that balance will be first to make it settle to this debenture interest. No. Company is not solvent. The cash is not available within the hands of the liquidator after making payment to the unsecured creditors. Then no need to make any payment. This point understand all of you? Okay. So this is the point just I want to highlight related to secured creditors with the floating charge. So related to preferential creditors, anyway, separate discussion is there. Just hold for some time. Preferential creditors, I'll discuss it later. Then let me discuss about things related to the shareholders. Okay. Very important. Concentrate. Are you with me, guys? All of you? Mr. Sunil Kumar. Yeah, debenture interest after liquidation till the date of making repayment, it will be shown along with secured creditors with floating charge only. Definitely, no doubt about it. But the point is whether we should need to pay it or not, or when we should need to pay. The company is solvent, we will pay after making payment to unsecured creditors. If the company is insolvent, no need to pay at all. But for the presentation wise, the total debenture interest up to the date of liquidation and post the date of liquidation, both we are going to present under secured creditors with floating charge only. But out of that, up to the date of liquidation is the real secured creditors with floating charge. Post liquidation, after making payment to unsecured creditors only, we are going to settle. Is it fine? Yeah. Sir, this solvency point, equity shareholder payment will not be considered. Will not be considered, ma. Equity shareholders and preference shareholders also will not be considered, because both are the real owners of the company. Always solvency means assets are sufficient to repay the liability holders or not, but not the shareholders. Shareholders are not the liability holders. Shareholders are the real owners of the company. That's why it should not be considered. It's fine. Still any doubts? Yeah. Let me take this issue, that is shareholders issue. Please concentrate. These are important points. Number of times student may face issue with these points only. Sir, preference share capital. I have 1 lakh preference shares at the rate of 8 rupees each. That is 8 lakh. So face value is 10 rupees, partly paid up 8 rupees. And equity share capital, I have 1 lakh equity shares at the rate of 5 rupees each. So 10 rupees face value, which is also partly paid up, 1 lakh into 5, which is 5 lakhs. Now the point is, cash available with liquidator only for 50,000. After paying secured creditors with floating charge, but before making payment to unsecured creditors. Unsecured creditors, I have 6 lakhs I should need to pay. Again, I'm repeating, cash available, the liquidator will be 50,000 after making payment to secured creditors with floating charge, but before making payment to unsecured creditors. Now, Is it cash is sufficient to make repayment to unsecured creditors by the liquidator? No, cash is insufficient. Whenever the cash is insufficient with the liquidator, liquidator will check for the options. Options means here uncalled capital is there na. In case of preference share capital, uncalled capital 1 lakh into 2 lakhs is there. In case of equity share capital, 1 lakh into 5 rupees, 5 lakhs is there. Here it is 5 lakhs. Here it is 2 lakhs is available. You know, the uncalled capital, the liquidator can able to call if the cash is insufficient to make repayment to the liability holders. Right now, because they already committed to the extent of their face value. So that is the reason why liquidator have the right to ask money from the shareholders. Now my question is, first the liquidator should need to call preference shareholders, equity shareholders, because the gap is key of 5.5 lakh I required. So definitely I should need to make a call from both the type of shareholders, both equity and preference. But my point is, first, whom I should need to make a call, equity or preference? Can you please give your answer? Equity or preference? Anyone, please, all of you participate, guys. To whom I should need to ask the money? Preference, equity, we should need to ask money first from equity shareholders. At the time of distribution, first distribution goes to preference, then equity. But at the time of asking money, first equity, then preference. Why, sir? Who are the real owners of the company? Equity shareholders are the real owners of the company. That's why definitely we will ask equity shareholders. Equity shareholders are such a persons, they are really ready to bear losses or gains, whatever the case may be. So that's why definitely we should need to ask equity shareholders. So we will ask the entire uncalled capital, which is 1 lakh multiplied with 5 rupees, 5 lakh. Then if I make the uncalled capital 50,000 plus 5 lakh will be 5 lakh 50,000. Still I required another 50,000. The another 50,000 I should need to ask whom? Preference shares. I required 50,000, right? How many number of preference shareholders are there? 1 lakh. So 50,000 divided by 1 lakh. So each and every preference shareholder should need to contribute 0.5 rupee each. So if each and every person, every preference shareholder contribute 50 paisa each, then I will get 50,000. So which is call money from equity shareholders, which is call money from preference shareholders. Then I will get 5,50,000. Sorry, then I'll get 6 lakhs. That 6 lakhs amount ultimately I can able to make payment to unsecured creditors. Do you understand? So next, what will happen, you know? Still, how much amount I should need to payable to the preference shareholders then? Do you understand? After making payment to unsecured creditors, again the cash is insufficient with me. But preference shareholder, I should need to pay this 8 lakhs plus, right now they contributed to the call now 0.5 into 1 lakh. That is 0.5 lakh, 8.5 lakh. To whom I should need to ask that 8.5 lakh? Equity shareholders actually. But is it equity shareholder available? They already contributed the entire thing. That's why preference shareholders, after making this call, they will not get anything. Equity shareholders total contributed 10 lakhs. They will not also not getting anything. That's why deficit to the preference shareholders 8.5 lakh, deficit to the equity shareholders will be 10 lakh. Up to that part only liquidator can able to settle. Post that, liquidator unable to settle to any party. Do you understand this, guys, all of you? So the procedure, how we are going to adopt at the time of distribution, hope you understand. So still my discussion is not yet over. Please concentrate. Now the thing is, cash available with liquidator is 50,000. Cash available with the liquidator is 50,000. And there are different class of shareholders available. It is class A, let us assume class A equity, not preference shareholders, sorry. Class A, different types of equity shareholders are available. Class A equity shareholders, 10,000 equity shares are there at rupees 10 fully paid up. That will be 1 lakh. So class B shareholders are there. 5,000 equity shares at the rate of 8 fully paid up. That will be 40,000. So class C shareholders are there, which are 1,000 shares at the rate of 5 rupees is full 5 rupees partly paid up. This is also partly paid up, sorry. So 1,000 into 5, which is 5,000. Now this is fully paid up. This is partly paid up. This is also partly paid up. In all the cases, face value is 10, 10, 10 only. Now my point is, after making payment to the preference shareholders, cash available with the liquidator is 50,000. Now, how I should need to distribute this 50,000 among these 3 different class of shareholders? Sir, if I have only one specific type of class of shareholders, simply I can distribute equally. But the thing is, here 10,000 equity shareholders, 10 rupees fully paid up. 10,000 equity shares, 10 rupees fully paid up. Here 8 rupees partly paid up. Here 5 rupees partly paid up. All are having equal face values only. Then how I should need to distribute among class A, class B, class C is my discussion. Let me know anyone how I should need to distribute. Do you think that class A, B, C per share I should need to distribute equally, sir? Sir, anyway, 10,000 quantum means based on their quantum only I will distribute. I'm asking per shareholder or per share. Is it equitable? Is it justifiable to distribute equal amount per share for class A, class B, class C? No. So then do you thought that it is better to distribute based on their paid up value? That is also not correct. That is also not correct. That is also unjustifiable. I will tell you the reason. Sir, class A shareholder 10 rupees fully paid up means they already contributed the total. 8 rupees paid up means still 2 rupees unpaid capital is there, uncalled capital. Here still 5 rupees uncalled capital is there. Let us assume if these guys will provide the call money, you can call it as notional call. Just really I'm not making a call. If at all I'm going for a call, how much they contributed? 5,000 multiplied with 2 rupees. How much, guys? 5,000 multiplied with 2? 10,000 they will contribute. If I go for notional call for class C shareholders, how much they will contribute? 1,000 into 5, which is equal to 5,000. Once they contribute this call money, all are equally paid up. All are having equal face value. All are having equal paid up. Then I can distribute 50 plus 10, 60 plus 5, 65,000. This 65,000 I can equally distribute per share. Do you agree? Once all the partly paid up shares are converted into fully paid up shares, then whatever the surplus is available with the liquidator, that surplus we can able to distribute among all these 3 classes equally per share. It's correct, right? Now, here A is there, B is there, C is there. So paid up value, A is 10, B is 8, C is 5. Now we are making a call. We are making a call from A, nil. No need to give anything. They already gave. From B, we are asking 2 rupees per share. From C, I am asking 5 rupees per share. So once I will get 65,000, I am giving the equal distribution. Distribution I am talking. Equal distribution among all. Sir, equal distribution among all means here 10,000 is there, here 5,000 is there, here 1,000 is there. 10 plus 5, 15, 15 plus 1, 16. 65,000 divided by 16. 16,000. 65,000 divided by 16,000. Per each and every equity shareholder he is getting 4.0625. Here 4.0625. Here also 4.0625. Now concentrate what is happening here. I am asking class B 2 rupees. Again, I am giving 4.0625. Rather than asking 2 rupees, and again giving 4.0625, it is better to distribute the difference. That is, you can distribute 2.0625 to class B. From class C, what you are asking? You are asking 5 rupees. You are distributing 4.0625. Rather than asking 5 rupees and again giving back 4.0625, it is better to give 1.0625. I mean, directly you can ask 1.0625 from class C. Coming to class A, only distribution, no calling. That's why you can give 4.0625. Now, with this, what you concluded? Existing balance with the liquidator is 50,000. Once you ask the real call money 1.0625 from class C shareholders, then 1.0625 multiplied with 1000 shareholders, I will get 1062.5. 1062.5. Then cash available, real cash available with the liquidator will become 51,062.5. Out of this 51,062.5, class A shareholders straight away will get 4.0625. 4.0625 multiply with 10,000 means 40,625. 40,625. I will give to class A 40,625. Still, how much cash is available with the liquidator? Still, cash available with the liquidator will be 10,437.5. Now, this 10,437.5 to whom I should need to give? Class B, because here I told you class B shareholder I will give 2.0625 per share. You can multiply 2.0625 multiplied with 5,000 shareholders. Exactly. Once again, 2.0625 into 5,000. I'm getting 10,312.5. So something somewhere, some clerical mistake, some multiplication mistake was happened. Just give me a second. Once again, let's check. So once again, I'm repeating the story till now what happened. So just there is some 100 rupees difference I am getting in my calculator. That's why. Sir, class A, 10,000 shares are there. Paid up value 10 rupees, face value 10 rupees. Class B, paid up value 8 rupees, face value 10 rupees. Class C, face value 10, but paid up value is 5 rupees. Right? Then here 1 lakh, 10,000 into 10, 1 lakh, 5,000 into 8, 40,000, 1,000 into 5, 5,000. That is absolutely fine. Then cash available with the liquidator is 50,000. Then I made the notional call at the rate of 2 rupees. 5,000 into 2, notional call 10,000 rupees. Here notional call 5 rupees. 1,000 into 5, 5,000. Now the total cash availability with the liquidator is 50 plus 10, 60, 60 plus 5, 65,000. Now I can equally distribute among all the parties. If I distribute 65,000 divided by 16,000, because 10 plus 5 plus 1, which is equal to 16,000. Then per shareholder, how much he is getting? 65,000 divided by 16,000. That will be 4.0625. So that's why distribution A 4.0625, B 4.0625, C 4.0625. That is also fine. Now I made a call 2 rupees for class B. So right here class B 2 rupees. I made a call class C 5 rupees. Now the net I am checking 4.0625 get by A. The difference 2.0625 get by B. The difference here I think so wrongly given here. That's why given 5 minus 4.0625 is equal to 0.9375. That's where that 100 difference is coming. So now the net call money made from class C 0.9375 per share. If I make call from class C shareholder for 0.9375, then I can able to distribute among the class A and class B at the rate of 4.0625 and 2.0625. That one I am proving here. Sir, existing cash balance with the liquidator is 50,000. Once I made a call, 0.9375 multiply with 1,000. Once I made a call, they will contribute 937.5, not this. They will contribute 937.5. Contribution by class C. Once they contribute, 937.5. Total cash available with the liquidator 50,937.5. Do you agree, all of you? From here, he will make payment to class A. Class A, how much he will make payment? 4.0625. 4.0625 into 10,000, which is equal to 40,625. Then cash availability with the liquidator, how much? 5937.5 minus 4625, which is 10,312.5. Now this 10,312.5 to whom I should need to distribute? Class B. How much per class B I should need to distribute? 2.0625 per share. 2.0625 into 5,000, which is absolutely equal to 10,312.5. Now the cash available with the liquidator will be nil. Like this, the liquidator should need to distribute cash among the different types of equity shareholders. When the equity shareholders having the equal face value but having the different paid up values. So by making a notional call concept, first all the equity shareholders we are making a fully paid up. Then I will check per each equity shareholder how much surplus or how much distribution he is getting. Then making a call, then how much distribution we are getting. Based on that, the net amount, call or net amount distribute, I will check. So the net amount call from C is 0.9375. The net amount distribute to A and B respectively is 4.0625 and 2.0625. Based on this, which class of shareholder, how much they should need to contribute, first I will call. After that, the liquidator is going to distribute the money among the shareholder to whom they should need to receive. Is it okay, guys? Now, let me know here, anyone having any doubt on this? Okay. So not proportionate distribution, not equal distribution, we should need to distribute in this manner. So earlier just I made a clerical mistake here, 5 minus 4.0625. I rectified. That's why exactly it's matching right now. Hope all of you understand this method. Let me know, guys. So some persons, they may feel this is a lengthy method, but actually this is a conceptual method. This was also suggested by the ICAI. In some problems they used. I will give you another simple method, which is not a conceptual method, but for process wise, a lot of students can feel that, which is something like in step-by-step manner. Okay, let me give that method also. That is another method. What is that? First, class A, class B, class C. You can consider here. Class A 10,000 shares, class B 5,000 shares, here 1,000 shares. Sir, face value 10,000 into 10, 1 lakh here. Here also face value 5,000 into 10, 50,000 here. Here 1,000 into 10, 10,000 here. This is the face value, right? Sir, paid up value. This is paid up at the rate of 10 rupees means 10,000 at the rate of 10. That is 1 lakh. Here paid up 8 rupees, 5,000 into 8, 40,000. Here paid up 1,000 into 5, 5,000. So just I'm writing at the rate of 10 rupees paid up, at the rate of 8 rupees paid up, at the rate of 5 rupees paid up. Now, what I know, cash available with the liquidator is 50,000. How much cash is available with the liquidator? 50,000. But is this 50,000 is sufficient to pay the entire paid up value? Entire paid up value, how much? 1 lakh plus 40 plus 5. So the total paid up value is actually 1,45,000, which is total. Now the cash available with the liquidator is not sufficient to repay the entire paid up value. Deficit is how much? Deficit 145 minus 50, which is 95,000. Now the deficit of rupees 95,000 should need to be distributed among A, B, C in face value ratio, not in paid up value ratio, in face value ratio. So what is the face value ratio? 10 10 ja, 10 5 ja, 10 1 ja. 10 is to 5 is to 1. The face value ratio is 10 is to 5 is to 1. Sir, deficit 95,000, just distribute in this ratio 10 plus 5, 15 plus 1, 16. So 95,000 into 10 by 16. Here 59,375 Okay. Here 95,000 into 5 by 16, 29,687.5. Here 95,000 divided by 16, 5,937.5. Now the deficit I distributed among the different class of shareholders on face values ratio. Now 1 lakh minus 59,375, which is 40,625. Class B 40,000 minus 29,687.5, which is 10,312.5, again positive figure. Now here 5,000 minus 5937.5, 937.5, negative. Now all of you, please concentrate here. Whatever the answers we received, it's exactly matching with as per previous method figures. Check here, in previous method class A, 4.065 means into 10,000 for total shareholders into 10,000, which is 40,625 only. Yes, 40,625. Class B, how much we distributed? 10,312.5 class B distributed. Class B, how much? 10,312.5. From class C, how much we asked? How much we called? 937.5 we called. Here, negative means making call. Exactly matching. So whether you can follow method number 1 or method number 2, there is no difference in between answers. According to your convenience, just you can follow that particular method. What my suggestion is, if they asked a specific question for 5 marks, all of you follow method number 2, because for presentation wise, it will be good. For a liquidator final statement, it's always just better to follow method number A. Okay, which is a little bit conceptual. If they ask specific question, just they draft some information how to distribute among these equity shareholders. Follow this method B. For at the time of presentation of liquidator final statement, at the last instant you want to distribute, then all of you follow method number 1. Is it okay, guys? All of you? Fine. So right, its time is like around 7:15 to 7:20. So can you please all of you assemble by 8 to 2? So exactly I'm providing 15 minutes break here. Please all of you assemble. So not 8 to 2, I'm so sorry. 7:35. It's not 8 to 7:33. Okay. So please all of you assemble by 7:33. Please all of you take break for 15 minutes. So our class timings will be 6 to 8:30. Then we have 1 hour buffer time. Then in today's session itself, let us try to resolve some problems as well. Okay. Yeah, guys, we've seen how to distribute among the various type of or various classes of equity shareholders when the face value will be same, but the paid up value will be different. Now, I'll provide a case where face value is different and paid up value also different. So let us assume so both the cases are important. That's why I'm telling here. So class A, let me continue the same. Face value is 10 rupees and the paid up value is 10 rupees. Okay, just give a second, guys. I forgot to open your query list. So if I open this, I feel that you are along with me. Okay, that's why. Yeah, fine. Uh, Rajiv Kumar just asked, I missed this doubt actually. Sir, how you calculated deficiency? Please explain once again. Ma, here deficit means, here the deficit means which is the difference between total paid up value and the existing cash available with the liquidator. So existing cash available with the liquidator is 50,000 and the total paid up value is 1,45,000. The difference itself is 95,000. That is nothing but deficit. Okay, fine. Let me continue with this example. So 10,000 equity shares, face value 10 rupees, paid up value also 10 rupees, and 5,000 equity shares, face value here 10 given, right? So class B, 5,000 equity shares, face value, let us consider 50 rupees. Or you can consider rather than 50, let's consider, yeah, let's consider 5 rupees. Okay, 5 rupees and 5,000 equity shareholders at the rate of paid up value is 4 rupees. And a class C equity shares, 1,000 equity shareholder, face value is 1 rupee. So 1,000, not 1 rupee. Let me consider the face value as 2 rupees and the paid up value is again 1 rupee. Okay. So now face value 2, 5, 10. Different face values were given. Or else just for a fraction, just I want to change the face value. I require a good fraction. Let me take this 100 otherwise. Okay. Oh, no, for fraction wise, it's working good for me. Then here the paid up value, let me consider it as 50. Okay. Now it's good. Now concentrate. I have 10,000 equity shares, face value 10, paid up value 10, 5,000 equity shares, paid up value 4, face value 5. So class C 1,000 equity shareholders, face value 100 and paid up value 50. So now the thing is, the cash available with the liquidator is again 50,000, same. Cash available with the liquidator is 50,000. How I should need to distribute this 50,000 among these different class of equity shareholders? But the problem is, in the earlier case, if you observe, face value is same. There is only change in paid up value. But in this case, face value itself is different and paid up value also different. Now what I should need to do, sir, here? If you convert all the different class of equity shareholders as equal face value, then this problem will be resembles as like the last model what we did before the break. Now how I should need to convert equal, how I should need to work out as equal face value for all the class of shareholders? If you apply the concept of equivalent units, then all the face values will be equal. So let me try to do this. What I want to do, all the face value, all the different types of class of shares, just I want to make it face value as 10 rupees. You can take anything as base. Now if I want to make it the class B shareholders also as 10 rupees, then here I should need to multiply with 2 Then here I should need to divide with 2. Here 5 2s are 10. Then 5,000 divided by 2, it will become 2,500. That is 2,500 equity shares at the rate of 8 rupees paid up value. How much here you are getting? 20,000. Here also how much you are getting? 20,000. Either you can tell 5,000 equity shares at the rate of 4 rupees paid up, or 2,500 equity shares at the rate of 8 rupees paid up. Both are same, right? Now here, to convert 100 rupees face value into 10 rupees face value, what you should need to do? You should need to divide with 10 here. That means you should need to multiply with 10 here. 1000 into 10, 10,000. 10,000 equity shares at the rate of 5, which is equal to 50,000. You can tell 1,000 equity shares at the rate of 50, which is 50,000, or 10,000 equity shares at the rate of 5 rupees each, 5 rupees paid up each, out of 10 rupees face value. Now I converted class A already 10 rupees, class B 5 to the 10 rupees, class C divided by 10, 10 rupees face value. Class A shareholders 10,000, no, sorry, class A number of shares 10,000, class B number of shares 2,500, class C number of shares 10,000. But the total paid up value, there is no change. Now let me calculate by applying method number 2. In method number 2, how I am distributing? So class A, B, C. First, you can consider the original number of shares. So original number of shares. So I provided original number as 10,000, 5,000, 1,000. Equivalent number of shares. Equivalent number of shares. 10,000, 2,500. Here 10,000. Now in all the cases face value is same, right? So face value at the rate of 10, it's simply you can multiply 10 into 10, 1 lakh, 10 into 2,500, 25,000, 10 into 10,000, 1 lakh. This is what about the total face value, guys. I'm not talking about the paid up value, total face value. If you check face value here also 10,010, 1 lakh, 5,005, 25,000, 1,100, 1 lakh only. The same just I written here. Next, paid up value. Now paid up value at the rate of, for class A paid up value still 10 rupees. 10 into equivalent number of units, 1 lakh only. For class B paid up value how much? Right now the new paid up value 8 rupees. Number of shares 2,500. 8 into 2,500, 20,000. And the new paid up value 5 rupees. 5 into 10,000, 50,000. And total paid up value, let me know, 1 lakh 20 plus 50, 1 lakh 70,000, which is total paid up value. But the cash available with the liquidator is, I know, only 50,000. But the total amount need to be payable to various class of shareholders was 1 lakh 70,000. Now the deficit is 1 lakh 50,000. Same as it is. Deficit of rupees 1 lakh 50,000 should need to be distributed among A, B, C in their face values ratio. Face values ratios means how much, guys? Let me know. This is the face value ratio. 25. 25 4s are 1 lakh, 25 1s are 1, 25 4s are 4 is to 1 is to 4. So 4 1 5 4 9. So 1 lakh 50,000 divided by 9 multiplied with 4. 66,667 here. Here also 66,667 here. The difference here it is 16,660. 4, I think so. Add the total 3, it should need to be equal to 1 lakh 50. Yeah, this is 6, not 4. This is 6. Okay, these are the deficit. Now 1 lakh minus 66,667, 33,333 here. Here 3,334. Here again 33,333. What is the meaning of this, guys? Now, sorry, here not that one, 16,667 here. Here it is negative, right? This one, okay, fine. Now, what is the meaning of this? We should need to ask class C shareholder to the extent of 16,667. Then we can able to pay class A 33,333 and a class B 3,334. How it happen? Existing 50,000. Let me ask the class C shareholders 16,667. Then total cash available with the liquidator will be 66,667. Do you agree? But still it is not matching. 1 second. Why? Guys, is it my computation is correct or anyway just I made the wrong? Just you can have a look. Let me know. Because here it is not working. Once the liquidator, if they are introduced, the 16,667, it will become 66,667. Then how I should need to distribute these two? That's wrong. Anywhere 10,000, 5,000, 1,000. That's okay. Equivalent number of units also I made. Okay. Face value 10 rupees. Paid up value, is it correctly multiplied by me? Yes, that is also correct. Oh, deficit. Sorry, I'm so sorry, guys. So deficit is not 150, right? 170 minus 50, which is 120. I'm so sorry, guys. Okay. So always the evening classes, almost like we done with the, we already spent a lot of time in that particular day. So seeing the figures, sometimes it will be looking like jumbling. Okay. That too, I'm tired till morning. Just I done with a lot of work in my other aspects. Okay, let it be. Just you can give the correct computations here. Now it will works exactly. So 4:1:4 means 1,20,000 divided by 9 multiplied with 4. Now I'm getting here 53,333. So here also 53,333. So which is 13,330. 4 here, right? Yeah. Now here 40. 6,667. Here 6,666. Here 3,333. Okay, now we made a call from class 3 to the extent of 3,333. Then total cash available with the liquidator will become 53,333. Out of this 53,333, 46,667 goes to class A, class B 6,666. Right? Now it is matching. So whatever the balance I have, simply I can distribute to class A and B. Sir, what is the meaning of this, sir? From class A, how much I am asking, for class A, per share, how much I am paying, number of shares or original number of shares are 10,000. If you divide with 10,000, then 4.67 per share you are distributing. For class B per share, how much you are distributing, the original number of shares are 5,000. If you division with 5,000, so how much you are getting with that per share you are distributing. For class C, the original number of shares are 1,000. If you division with 1,000, 3.33 you are making a call. That means if you are making a call to the extent of 3.33 per share from class C, then you can able to distribute among class A and class B in their respective portions. That is the meaning of that. Is it okay, guys? That's fine. Yeah. Oh, a lot of students just told, sir, dev sheet is 120. I'm so sorry, guys. I realized at the end. Okay. I didn't see in your query box. Okay. Anyway, this is the way of distribution in generally we should need to do when the face value is different and the paid up value is also different. Okay. So both the methods I explained for distribution among the different types of equity shareholders. So next, still my discussion is not yet over. Still we are in liquidator final statement only. Just give me a second. Yeah. So I done up to the part of distribution. This part is also important to explain the liquidator final statement in deeper manner, but I don't want to check the entire section 326 and 327. Just right now, I want to discuss only about section 327, because if you check in our liquidator final statement, one of the party itself is preferential creditors. Only I want to discuss about preferential creditors, which is section 327. Now, I'm giving a clarification for your doubt. Sir, even though why preferential creditors you are giving the preference before making payment to secured creditors with floating charge, even though those are unsecured creditors? The reason is very simple. Those are such a type of creditors, even though they are not having the security, we should need to give the preference. By seeing the nature itself, you can understand why we are giving the preference. First, which type of items covered under this preferential creditors? Let me explain. Then I can simply correlate why you can give the priority while compared with floating charge. Okay. Sir, under 327, the following creditors we should need to give preference among all other creditors subject to 326. Subject to 326 means we will discuss it later. So if you ignore 326, as per section 327, among all the creditors, you should need to give the priority to these creditors. So let me discuss about section 326 at later, not right now. Okay. Then who are all covered under section 327? Government taxes, duty, cess, etc. Sir, a company which should need to be payable to the government related to income tax, let us assume. Government doesn't have any security, but still you should need to give the first priority. That's the reason why it is called as preferential creditor. In preceding 12 months only, from the date of liquidation within 12 months, any amount payable to the government in the form of taxes, duties, cess, you can treat it as a preferential creditor. Compensation in case of death or disablement. For employees during the work, disabled, then any compensation is paid. Employees doesn't have any security, but in priority you should need to provide. So that's why it is treated as preferential creditor. Next, any employee salary, not the workman. Sir, workmans are getting very less wages while compared with employees. Now, if employee itself you are treated as preferential creditors, then what about workman, sir? Workman is going to covered under 326. Workman is having much more priority. You can understand while discussing 326. That's why for the time being, employees whose salary or wages within a period of last 12 months to the extent of 4 months salary, we should need to treat it as a preferential creditor. But a specific employee salary should not exceed 20,000. Again, I'm repeating, out of 12 months salary, any 4 months, you can consider it as a preferential creditor. But that employee salary, that amount is should not exceed 20,000. Holiday remuneration of the employee. PF, gratuity ESI fund, that is statutory obligations payable by company to the employees. Any investigation expenses, if any CBCBI, or sorry, CDCBI, so something like that, maybe National Company Law Tribunal just ordered for a particular investigation, then first it should need to pay the investigation expenses, right? So it is also it is also an unsecured creditor, but still we should need to treat it as a preferential creditor. So simply, who are all coming under the preferential creditors as per section 326? As per section 326, government taxes, duty, cess within a period of last 12 months. Employee salary out of 12 months, any 4 months salary, but it should be less than 20,000. Employee holiday remuneration, employee PF or gratuity or ESI. Next, one more thing. What is that? Employee death or disablement compensation and investigation expenses. All these should need to give in priority to security creditors with floating charge, even though these creditors doesn't have any security. Do you understand this? This is what section 326 tells us. So now, while reading the problem, if any information is coming to the picture while presenting the liquidator final statement, then here you should need to consider as a preferential creditors. Okay, this is not 326. I'm so sorry. This is 327. That too. 326 is overriding preferential payment. These persons have much more priority than 327. I'm not discussing at this moment. We will discuss section 326 at later point of time. So there is so much of theory, and from inception onwards for today's session, a lot of issues I discussed. I know you may also feel boring. So let me take up some problems for the discussion. So remaining theory part, I will shift over for tomorrow's session. Okay. But still, the conceptual part is not yet over, but intentionally just I want to move on with the problems. For some problems, without enhancing or without checking the other conceptual aspects, we can simply do that. So whenever I required, then I again coming back, then we'll tell the remaining part. Okay. Yeah, please all of you open your soft copies or hard copies, make it handy, or else you can see my screen directly. Let me start with problem number 1. In which sequence the following payments will be made while preparing the liquidator statement of account? They require the sequence. Debenture holders, unsecured creditors, legal charges, equity shareholders, preference shareholders. Can you give numbering for the sequence first? All of you put your answers here. So Darshan is asking one more question. What is that? Sir, among the preferential creditors, which one should be paid first? No, all should be in the same line. For example, cash availability with the liquidator is 1 lakh. I have 5 preferential creditors. According to their outstanding liability in proportion, I should need to distribute. So that is valid doubt. So before checking the question number 1, just let me resolve his doubt. What his doubt is, cash available with the liquidator is 1 lakh. Let us assume 3 preferential creditors are there. One preferential creditor outstanding balance is 1.5 lakh, another one is 2 lakh, another one is 3 lakh. Now I should need to distribute this 1 lakh based upon this outstanding liability proportion. That's it. All are in equal footing. All are in equal footing. No one is more, no one is less here. Hope Darshan, your point will be clarified. Okay, fine. So now here first legal charges first, right? Then post legal charges, let me know guys. Debenture holders, in generally we can feel that security creditors with a floating charge. So that's why 2. Other unsecured creditors is 3. Then 4 preference, 5 equity. So 3, 1, 2, 5, 4 is the correct order. Okay. Next, all of you please come to problem number 2. Amount payable in winding up of a company are as follows. Security creditors 1,25,000. Workman's due 2,50,000. Show the payments made and the treatment of balance in the following 2 instances. If the security realized is 2 lakh and if the security realized is 1 lakh. Guys, let me discuss this problem number 2 at later point of time, because which is related to section 326. Okay, but this is important model. I'll discuss it later because we not yet discussed section 326 concept. This is section 327 concept. Let me read this. Okay. A company went into liquidation whose creditors are 36,000. This amount of 36,000 includes 6,000 on account of wages of 15 men at 100 rupees per month for 4 months, immediately before the date of winding up. So if you check here, out of this 36,000, one is 6,000 on accounts of wages of 15 men, 100 per month for 4 months. Per month 100, for 4 months 400. 400 into 15 men, which will be 6,000. Is it form part of preferential creditor or not, guys? Just now we read, out of the 12 months, 4 months salary we can consider it as a preferential creditor. It should not exceed 20,000. Yes, nowhere it is exceeding 20,000. So that's why entire 6,000 is preferential creditors. Yes. Next, 9,000 being the salaries of 5 employees at rupees 300 rupees per month for the previous 6 months. No, the entire 6 months we may not consider. Out of that, we will consider only for 4 months. 4 months means 4 into 300, 1200. 1200 into 5, 6,000. Out of this 9,000, only 6,000 will be the preferential creditors. What about the remaining 3,000? Unsecured creditors. Okay, that's why which is not a preferential creditor. Next. Rent for godown for the last 6 months amounting to 3,000. Godown rent is a preferential creditor? No, don't consider. Income tax deducted out of salaries of the employee 1,000. Whatever the TDS reduced by the employer, it should need to be payable to the government. Amount payable to the government in the form of taxes, duties, cess is a preferential creditor. Yes. In addition, it is estimated that the company would have to pay rupees 3,000 as compensation to an employee for injuries suffered by him. Disablement compensation is also a preferential creditors, which was a contingent liability not accepted by the company and not included in the above said creditors. In this 36,000, they not included this 3,000, but the 3,000 we should need to consider as a preferential creditor as per section 327. Find the amount of preferential creditors. 6 plus 6, 12, 12 plus 1, 13, 13 plus 3, 16. Total 16,000 will be the preferential creditors as per section 327. So you can cross verify the answer with PDF as well. So wages, salaries, income tax, compensation. So total preferential creditors as per section 327, 16,000. They're not asked in the question. Unsecured creditors also I worked out. So out of 36, if I remove 6, 6 plus 1, 12 plus 1, 13, 23,000 will be the unsecured creditor. Don't include this 3,000 because 3,000 was not at all included under 36,000. He clearly given. If at all in the question, how much portion will be the unsecured creditors, then you should need to tell unsecured creditors will be 23,000. But anyway, just they asked up to this part. Is it clear, guys? All of you? Problem number 3. Any doubt? So problem number 4, we will check later, not right now. Okay. Please, all of you come to problem number 5, guys. Problem number 5. Can I start? So if you're okay, I'll start problem number 5. Please confirm, guys. Anyone? Yeah, thank you. So a liquidator is entitled to receive remuneration at 2% on the assets realized. Okay. 3% is on the amount distributed to preferential creditors, and 3% on amount distributed among the preferential creditors given, and 3% on the payment made to unsecured creditors. The assets were realized for 50 lakhs, against which payment was made as follows. Liquidation expenses 50,000, secured creditors 20 lakhs, preferential creditors 1,50,000. The amount due to unsecured creditors was 30 lakhs. You are asked to calculate the total remuneration payable to the liquidator. Calculation shall be made to the nearest multiple of a rupee. So at the time of discussion of liquidator remuneration concept, we explained everything. So which is problem number 5. Let's do it in our OneNote. So in the first instance, 2% is on the assets realized. So how much worth of assets realized by the liquidator? 50 lakhs. So 50 lakhs into 2% is 50,000, right? Oh, 1 lakh, not 50,000, 1 lakh. Now let me use the calculator. Today, a lot of computation mistakes are also coming. Okay. Yeah, that is correct. 1 lakh. Next. 3% is on the amount distributed to preferential creditors. Preferential creditors 1,50,000. 1,50,000. 3% is on preferential creditors. So that is 1,50,000 into 3% is. How much, guys? 1,50,000 into 3% is, which is 4,500. So, and the next one is 3% is on unsecured creditors. Unsecured creditors, how much? 30 lakhs. Don't directly apply this 3% on 30 lakhs. If the cash is sufficient, you can apply. Whether we don't know the cash is sufficient or insufficient, then why you directly applied on the preferential creditors, sir? So a lot of cash I have. I mean 50 lakhs worth of cash I have. That's why I thought of up to preferential creditors. It will be enough. Definitely liquidator will not be empty. Okay. So, but for unsecured creditors, I don't know whether liquidator will have sufficient cash to repay for that or not. So first let us check cash availability with the liquidator before making payment to the unsecured creditors. First, initially, how much cash he have? 50 lakhs worth of assets realized, out of which liquidation expenses straight away let me reduce. Then liquidator remuneration till the date liquidator remuneration how much? 1,04,500. In the order I am coming. So then secured creditors 20 lakhs. So you can just treat it as a secured creditors with floating charge. Okay. Or else if you want to treat it as a secured creditors with fixed charge, at the first instant itself only it is reduced in any way. Or else let me clearly treat it as a floating charge, no issue. So floating charge means after preferential creditors I'll pay na, just wait. Then first give payment to preferential creditors, that is 1,50,000. Then secured creditors 20 lakhs. So just check once how much cash is available after this. 50 lakhs minus 50,000 minus 1,04,500 minus 1,50,000 minus 20 lakhs. I have 26,95,500 worth of cash availability. Yeah. How much amount need to be payable to unsecured creditors? 30 lakhs. Is it sufficient? Amount payable to unsecured creditors is 30 lakhs. The cash available with the liquidator is only 26 lakhs 95,500. How I should need to calculate the remuneration? Cash availability into liquidator remuneration percentage by 100 plus 3. That is 3 by 103 simply. That is 26 lakhs 95,500 into 3 by 103, which is equal to 78,509.71. So nearest rupee means 78,510. Let us check 78,510. So the total liquidator remuneration is 1 lakh plus 4,500 plus 78,510. So which is like 1,83,010. Okay. So if anyone having any guys. Right, before proceeding with the next problem, just you can take a minute for absorption time. Okay. Don't worry, that's okay. At the end of the session, I'll provide my mail ID. Not important. If you have any doubts, just you can ping me. Okay. So definitely provide a reply. But it may take some time. Once without a doubt, then you can just come to my mail ID. I'll finally just provide one. Yeah, fine. So let me consider problem number 6 and 4, 7. I thought of last in the couple of examinations, just they ask the similar type of questions. So we already done in the form of examples. So just let us prove our accuracy once again through these problems. Sky Limited went into liquidation on 1st April 2011. Following are the details regarding the share capital of the company. 20,000 equity shares of rupees 100 each 75 paid up. 30,000 equity shares of rupees 100 each 40 paid up. 80,000 equity shares of 100 each 65 paid up. Equal face value, but different in paid up value. Surplus available with the liquidator after discharging all the liabilities is 20 lakhs. distribute the surplus money among different categories of the shareholders. Now, I told you, if they ask the question on individual basis, always it is better to apply the method to itself, okay, because which is like in systematic manner. So yes, you can give class 1 3 shares. So here 20,000, here 30,000, here it is 80,000. So then face value, you multiply with 10 here, which is 2 lakhs, which is 8 lakhs. Enough, right? Then paid up values into 75 here. 20,000 multiplied with 75, which is equal to 15 lakhs. Okay. Here 30,000 multiplied with 40. So here it is 12 lakhs. Here 80,000 multiplied with 65. So which is 52 lakhs. This is all about the paid up value, right? Now it is clearly given cash available with the liquidator is 20 lakhs. So you can check the total paid up value 15 plus 12 plus 50. 79. 79 minus 20 means 59. So deficit of rupees 59 lakh, you should need to distribute in the ratio of 2:3:8. So I don't want to give much importance on computations here because a lot of time it will consume. You know the procedure. So let me check the solution with the PDF. So for knowing the procedure till now, just I done. Let me just put here. 59 lakhs distributed into 2:3:8 ratio. Okay. Then the deficit after distribution, total balances, just we derived something like this. What is the meaning of this? If we ask the class 2 shareholders to the extent of 161,538, then we can able to distribute among the class 1 and class 3 to the extent of these amounts. So per share, if you want to know, if you divide it with the number of shares we have here itself. If you divide with the number of shares, then you will get per share as well. Okay. This is all about problem number 6. So similar example I already covered. Next, related to problem number 7. Wind Limited went into the liquidation on 31st March. So number 1542 lakhs, face value 15010, paid up value 9025, and these are fully paid up. Surplus available to the liquidator after making payment of all liabilities is 12 lakh. Distribute the surplus money among the different categories of shareholders. Face value different. Paid up value also different. Then how you should need to tackle this? So if I convert all the equity shares into equivalent number of units, let us assume, consider all the face value as 100. Here I should need to multiply with 2 divided by 2. If it is divided by 2, 20,000 equity shares at the rate of 100 each. Here multiply with 2 divided, multiply with 10 divided by 10. Here it is 2 lakh equity shares at the rate of 100 each. So not 2 lakhs, so 20,000. So equivalent number of units, how you should need to work out? 50 rupees to face value 100 rupees means I should need to multiply with 2. That's the number of shares I should need to divide with 2. 40,000 divided by 2, 20,000. 10 rupees face value, if I should need to convert it into 100, I should need to multiply with 10. That's why I should need to divide here with 10. So 2 lakhs divided by 10 means 20,000 shares. So now let me explain the solution directly from PDF. So equivalent number of shares. The same here, 15, 20, 20. Here consider 15,000, 20,000, 20,000. So face value, you know, all are equal face value right now, which is 100. That is 15,000 into 100, 15 lakhs. 20,000 into 100, 20 lakhs. Then 20,000 into 100, 20 lakhs. So paid up values here itself given 15,000, 90, 40,000, 25, 2 lakhs into fully paid up. Or else you can consider these as well. So the individual paid up value is also considered. Total paid up value is 43 lakh 50,000. Cash available with the liquidator 12 lakhs. Deficit is how much? Surplus available is 12 lakhs. But right now paid up value is 43 lakh 50,000. The difference itself is deficit. 31 lakh 50,000 is deficit. You can distribute in paid up value ratio. Paid up value ratio 3:4:4. Then individual contributions came. What is the meaning of this again? Type 2 should need to contribute. Then we can able to type 1 and type 3. Per share if you want, just you can directly divide with the original number of shares. Original number of shares means divided by 15,000. Here divided by 40,000. Here divided by 2 lakhs. Then you will get per person how much you should need to contribute or how much we should need to distribute. This is all about roll number 7, guys. Any doubt? So similar examples we considered. That's why in depth I'm not again taking care here. Okay. Sir, let me end this session with one important concept, which is section 326. Then in tomorrow's session, I can only give my entire concentration on liquidator final statement and list B contributories and on statement of affairs related problems. Okay. So that let me finish that section 326, overriding preferential payments. Yeah. At the beginning, I will not tell anything. What is overriding preferential payment? Let me directly consider one example. Post example, I'll discuss everything. Okay. So you can check the example here itself. Sir, in my organization, workman due is 3 lakh. Workman due means on daily labor they are coming, right? We will pay based on the production or based on the time wages. Okay. So just those we can call it as workman. The difference between workman and employee itself is, for workman, there is no agreement. Company have a right anytime. If they want, they can stop. Employee, there is a specific agreement. They cannot stop like that. Okay. And completely unskilled workers, this workman work. So in fact, to tell, workman were having the lower grade while compared with the employees. That's why definitely at the time of liquidation, we should need to give the high priority to the workman, because those were completely based upon the on daily wages. That's why to provide the security, to provide some days for them, the Companies Act 2013, even though those were unsecured creditors, we should need to give the high preference among all them. Sir, while compared with 327, still 326 will be the superior. 326 will be superior than 327. So that's why while discussing 327, I told you subject to 326. Do you understand? So the type of workman you just I considered for example, and a secured creditors with fixed charge, I'm having 1 lakh. Now concentrate all of you. There is a provision in the Companies Act 2013 that always workman due. First, we should need to give the priority, because those are baseless people. On daily wages, they will work. They don't know anything. They are illiterate as well. Sir, even though a particular liability is having a secured creditor, with fixed charge, still the act is clearly telling that workman due is having the equal opportunity along with the secured creditors with fixed charge. So what you are trying to tell here, sir? Let us assume a bank loan is there. So machinery is offered as a security for that bank loan. Now you want to realize that machinery in the outside market. You are not eligible to provide such a realization directly to the banker. Now such a realization should need to be distributed in proportion of workman due and secured creditors with fixed charge. So for that particular purpose, here I considered workman due as 3 lakh, secured creditors with fixed charge 1 lakh. Let us, you consider it as a bank loan. Now the machinery outside market value is 1 lakh. If this workman due is not there, this entire 1 lakh will belongs to bank loan. Then there is no problem. But one workman due is there in the organization, then this 1 lakh we should need to distribute both to workman dues as well as secured creditors with fixed charge in their outstanding proportions. Their outstanding proportion means for this 1 lakh into 3 plus 1, 4, total 4 lakhs. Out of 4 lakhs, workman contributed to the extent of 3 lakhs. That means 3 by 4th portion. Out of this 1 lakh, he contributed 1 by 4th portion. So that's why for workman, 1 lakh into 3 by 4, 75,000 we will pay. For secured creditors with fixed charge, 1 lakh into 1 by 4, 25,000 we will pay. Sir, then where is overriding preferential payment here, sir? Till now, I not discussed the overriding preferential payment concept. I told you a basic provision in the Companies Act 2013. That is workman due will have the superior authority to receive the amount from the company at the time of liquidation. In fact, it is clearly given at the time of realization of any specific asset within 30 days, we should need to settle the workman dues. That is the provision actually given in the Companies Act 2013. So that's why even though secured creditors with fixed charge is also available, we should need to provide a equal footing to the workman due at the time of settling. Concentrate. What is the meaning of overriding preferential payment? Amount payable to balance amount payable to workman due is form part of overriding preferential payment. Balance amount means, sir, out of the secured creditors with fixed charge, 75,000 they received. 3 lakhs minus 75,000 still balance. How much? 2,25,000. Such 2,25,000 is overriding preferential payment. Not only that, due to making pari passu payment. Pari passu is a Latin word. Pari passu means equal footing. Due to making pari passu payment to workman due along with secured creditors with fixed charge, how much amount sacrificed by the secured creditors with fixed charge? Here 75,000 amount was sacrificed by the secured creditors with fixed charge. If workman due is not there, this entire 1 lakh will belongs to the secured creditors with fixed charge only. So, but right now they sacrificed to the extent of 75,000, right? That 75,000 also we should need to treat it as a overriding preferential payment. That means this 2,25,000 plus this 75,000, we should need to make payment before making payment to preferential creditors itself. That is the meaning of the provision. Now, let me come back to the provision. What the provision says, let me read here. This, one second, let me open the material. Overriding preferential payment, but which is a little bit technical. Now, if you read, you can understand. In the winding up of a company, following debts should be paid in priority to all other debts. In priority to all other debts, as per section 326. Those are workman dues. And where a secured creditor has realized a secured asset, so much of the debts due to such secured creditor as could not be realized by him. So much of the debts could not be realized by him. How much amount of the debts could not be realized by him due to making pari passu payment along with the workman dues. Due to making pari passu payment along with workman dues, how much amount unable to realize by the security creditors with fixed charge, that amount also we can treat it as a overriding preferential payments. Okay, so here below it is clearly given by me, balance of workman due and unrealized amount of security creditors with fixed charge due to pari passu with workman, we can treat it as overriding preferential payment. Is it okay, guys? Now let's do one problem at this particular stage. That is, I think so, the problem which we left over earlier on overriding preferential payments, which is problem number 2, guys. Okay. Oh, it's almost 8:30. We are running out of time. Okay, we'll do one thing. So overriding preferential payment concept was over. Tomorrow, first, let me start with problem number 2. Just I will revise the overriding preferential payment concept once. I will not revise the entire content, only OPP I will revise. Once overriding preferential payment concept revise, I'll start with problem number 2. Followed by, once complete this particular portion, let's try to concentrate some problems on liquidator final statement. Like I'll consider 2 to 3 problems. Okay, in fact 2 problems only, not 3 problems also, because those are also a little bit lengthy. So to save my time, I'll try to explain with PDF as well. Then we'll take up the list B contributory concept. So that is very small concept. We can able to finish it off within 10 to 15 minutes. Once list B contributory concept will be over, then statement of affairs, how format will be, I'll show. But for examination wise, it is not that much of important due to lengthy in size. Okay, that too, no need to work out in specific, just you should need to follow the format. I'll try to explain the entire format by using my material itself. Then let's do one problem on the statement of affairs also from top to bottom. Then officially we can close the liquidation of companies chapter in tomorrow's session. Okay, that is the plan for tomorrow. So tomorrow, little bit the session will be hectic, so please all of you be prepared, be log in on time. Okay, that is, it will be 7 to 9:30 as usual, as per your schedule it will be happen. But the session which is going to happen as on 1st September will be cancelled. So the session just now I take up right now, but due to that reason, just I am canceling that particular session. Okay, hope you enjoyed the today's session, guys. Still, if you are having any doubts, so always you have the choice to ask. And no worries, at the end of the session, I will provide the contact details for me. Contact at any resolutions or any doubts with respect to your exams. Okay, until bye, have a good day.